The central bank cut its benchmark lending rate for the fourth consecutive time this year, following a decline in the rate of inflation to a two-year low of 4.14% last month, compared to a high of 19.72% in November last year. Consequently, central bank lowered its benchmark lending rate by 200 basis points from 13% to 11%, paving way for a further rate cut by commercial banks, whose interest rates still remain above 20% and as high as 25%. In a statement signed by Central Bank Governor Professor Njuguna Ndung'u, CBK says the decision was based on a stable macroeconomic environment due to low inflation and stable food prices. However, CBK noted that high fuel prices still remain a threat to inflation, affecting the cost of transport and electricity. The stability of the shilling was also a major factor, with the local unit fluctuating between 84 shillings and 91 cents and 85 shillings and 28 cents against the dollar. Central Bank's confidence was, however, boosted by an increase in the country's import cover to $5.27 billion, or 4 months' worth of import cover, after the International Monetary Fund (IMF) approved the release of an additional $110.6 million to the country under the extended credit facility. The market regulator, however, identified high oil prices and the country's growing balance of payments as key threats to economic stability. The Monetary Policy Committee, however, felt that the drop in inflation below the government's target of 5% and the stability of the shilling, coupled with increased credit to the private sector, created enough room for the ease of monetary policy stance to 11%. The cut in the central bank rate is expected to translate to a further cut in interest rates by commercial banks. Going by past experience, commercial banks could lower interest rates to as low as 16% and as high as 20%. Henry Gadaiga, Citizen Business.
The local insurance sector has posted a 23.7% growth in premiums during the first half of the year. Statistics from the insurance sector regulator indicate that during the 6-month period, insurance companies underwrote 55 billion shillings in premiums, comprising of 36.6 billion shillings in general insurance and 18.4 billion shillings. The industry's assets grew to 272.3 billion shillings, with 211.8 billion shillings worth of assets under investment. Elsewhere, Family Bank has for the second time turned to its shareholders to raise more capital to enable it expand its business across the region. The bank has officially launched its rights issue, in which it is seeking to raise 1.25 billion shillings to enable it expand its operations. The bank has issued a total of 40.5 million shares, in which shareholders will be entitled to 1 share for every 6 shares held. And finally, tea farmers in Kericho County are set to benefit from the establishment of a 1 billion shilling green tea processing plant by Chinese multi-level marketing firm Teens. The firm, which deals in food supplements, says it incurs heavy costs while importing tea for blending with its health products. Dennis Otieno, Citizen Business.